I'm with Andy Lakeman, co-founder of the Atlantic House Group. Andy, it's a great pleasure to have you here at the Investment Leaders Forum, New Zealand.
Brilliant. Great to be here.
Andy, across the 2 days, we've analysed the portfolio construction views of so many of the leaders across the domestic advice industry in Australia and New Zealand. What are your conclusions on the levels of diversification that we're really achieving for clients?
I think people probably think they're a little bit more diversified than they are. And I think talk of 60-40 being dead, I just don't agree with, because I think, bonds the other day rallied when the market tanked. So I think bonds are close to probably having a place again. And that would be my view.
Volatility is a really interesting thing because it's there in the market all day, every day. It's ever present. But one of your messages for the community at this event has been that think of volatility as another asset class.
Yeah. Oh, for sure. I mean, you can sell it and use the premium to generate yield, or you can be long it and get essentially a form of crash protection embedded in your portfolio. And that's what we're trying to do.
What are the constituent parts of a portfolio that's designed to offer truly uncorrelated returns?
Well, what we are aiming to do is give uncorrelated returns in normal markets. So we define normal markets as being a bit like last year. And we do that with a number of underlying strategies. And then we sort of pair that with essentially a long volatility component, which has got 2 bits to it, tail and trend. And so that's the bit that shouldn't make money much of a time and should really kick in if we see markets turning ugly. But ordinarily, we would be hoping to make cash plus returns from the diversifier sleeve and uncorrelated to equities and bonds.
You've just launched the Uncorrelated Strategies Fund in Australia.
Yeah. Take
us through the 2 approaches and how they slightly differ.
Okay, so if we start with investors want assets or funds or products that aren't correlated to their equities and bonds, equities in particular. And so we need to construct a portfolio that can give those uncorrelated returns, as I said, in good times, but also our investors want that downside protection. So we tilt the fund through its risk budget to being long volatility. So in jargon-free terms, that means if markets had a sizable correction, and by sizable I mean in excess of 15%, we would hope to make decent money, decent double-digit returns. But hopefully, most of the time, markets behave themselves. And what we need to be able to do is generate returns of cash plus 2 to 4%. We wouldn't expect ever to make much more than that.
Does it matter to Atlantic House what users of the fund, what bucket they put it in? But if you did have a preference for how it's bucketized, what would that be?
Oh, this is pure alts. I mean, we've got products in our range that are harder to classify simply. This is pure alts, or whatever you define. Yeah, alts, liquid alts. But, it's pure alts.
It's funny, we had another conversation quite a while ago where you mentioned that liquid alts, that phrase in Australia, you were saying that back in Atlantic House's home market of UK and Europe, the liquid is just a redundant word. The clients would expect it to be.
Yeah, exactly. Because I think clients, hedge funds entered the UCITS world after the financial crisis. And so everybody knows whatever the hedge fund strategy is, if it's in a UCITS fund, it's going to be liquid. So yeah, but here liquid alts is a more acknowledged term.
Andy, across this wonderful event, we've heard so many views on markets, but also we've heard how to frame those views and themes for advised clients. What have been some of your key takeaways from the Investment Leaders Forum?
I think there seems to be a view that the world's looking all right, that maybe investors are being too pessimistic, worried about the geopolitics. As I said, I mean, I don't have any views beyond personal views, and as a firm, we don't embed views into our portfolios. But my key takeaway is that I think there's a perception that end investors are worrying about geopolitics, and actually the economy and companies are in decent nick. That would be my key takeaway.
Andy Lakeman, it's been a pleasure having you at the Investment Leaders Forum.
Thanks, James.